Very good. Good morning, good afternoon, good evening around the world. Thank you so much for joining us for an important conversation about the UK and the EU and what's happening with trade, what's happening with Brexit, what's the impact on business from the pandemic, what are some of the things that you need to be thinking about for your business in the region. We've got 3 experts today. You're going to learn all that you need to know. They're going to speak for about 30 minutes, and then we're going to have 30 minutes for Q&A. So along the way, as you have questions, feel free to put them into the Q&A box or send them to info@globalchamber.org, and we'll monitor them there. My name is Doug Brunke. I'm the founder and CEO of Global Chamber. I'm very happy that you're able to join us because the 3 speakers we have really are experts. The first speaker is Jeremy Thomson Cook, and he's on the economic side, so he's the Chief Economist at Equals. I would like to especially thank Katie Keith of Equals for arranging this special presentation by Jeremy. Jeremy is well known in the financial industry. He gives presentations and updates all the time about the economy, not just in the UK or in the EU, but around the world. He's an expert on the financial side of things. And then we're going to follow up Jeremy with 2 experts on the logistics side and what the impacts of what's happening in business are having on the supply chain. So Jeremy Thomson Cook, thank you so much for joining us today. And we look forward to being enlightened today about what's going on and what the latest is post-Brexit and also relative to the current economic situation.
Thank you very much for that very kind introduction, Doug, and hello to everyone who's on the call. It's a pleasure to be with you today. Obviously, there's a lot going on, so anyone taking an hour out of their busy day to listen to us talk about what may happen to the UK, EU, global economies, and obviously supply chains as a result of COVID-19, as a result of Brexit. 2 front-page story issues which continue to worry businesses both in the UK and the EU, and obviously have impacts globally. First off, given the coronavirus crisis, I'd also like to send out my thoughts to anyone who have themselves or whose families have been affected by the crisis. This is a human tragedy as much as a business tragedy, or even more so than a business tragedy, and so it's always, I think, salient to take account of that. And then talk about the business side of things as well. So if we can talk about COVID-19, we can talk about the world as it is at the moment. We've seen probably the biggest fall that we will ever see in global economic output in one quarter, and we're likely to see the biggest bounce back ever as well in Q3. This is how these things work. 20 to 30% falls in GDP are not normal by any stretch of the imagination. In certain countries, 5 to 6 years of economic growth have been lost over the course of a 3-month period. Now, this was self-inflicted. I'm not saying the virus was self-inflicted, but government responses were self-inflicted, i.e. shutting things down, saying you cannot leave your house, you cannot go to work, you shouldn't travel on public transport, you are not allowed to go to the shops unless it's for food, you are not allowed to go to the shops unless it's for medicine. So the huge destruction that we have seen of economic activity has been self-inflicted, and the key now obviously is the recovery. Let me just get my slides up, and I can show you exactly what we're looking at here at Equals. So as far as the recovery goes from now, it's obviously always a case of just where we are seeing a recovery globally, and what that recovery is likely to look like around the world. So, as much as we talk about supply chains, here in economics, we also have to talk about chains of demand as well. And while we're seeing trade kind of recover globally, there are key distinctions and kind of, as we would call it, idiosyncratic performance in various sectors. The graph that I have on the right-hand side of this slide is simply the richest 30 economies in the world, and then I've ranked them by their output via the services sector. Now, the services sector is obviously the one that's been hit hardest by the global pandemic. Think about restaurants, think about cinemas, think about hotels, think about travel. They have been almost totally shut down, whereas some manufacturing elements, certain construction elements have still, quarrying, for example, have still been able to go as a result of the fact that certainly in a large industrial sector circumstance, you may just have social distancing be the norm given the scale of the plant material, for example. So we rank economies via their services sector weight, and therefore we look at countries which are likely to recover faster than certain others. Indonesia, China, Saudi Arabia, if you take into account oil production as a manufacturing exercise, they're the top three for lesser services sector weight, and therefore the ones that are likely to recover faster, we think, given manufacturing tends to recover fast from any side of a recession. And unfortunately, for those of you on the call and for those of us speaking, France, UK, and the US have the highest services sector weight, so therefore GDP is likely to remain slow in those areas as a result of the fact that there is so much weight being put on sectors which are likely to be hit by furlough and hit by a slowdown in the economic speed. The one thing that we also have to bear in mind when we talk about the manufacturing sector, obviously, is the fact that a lot of these businesses that will be in the manufacturing sector are part of global supply chains. Korea, for example, if I can take the country of Korea as a specific example, a lot of their exports are either into other parts of Asia, for example, Japan, or into China, but the majority of it will come westwards. It'll come into the EU and it will come into the US. So if we're starting to see a slowness in the services sector there, we may also be seeing a services sector westwards. That's going to have a knock-on effect in the manufacturing sectors over in the east. For now, however, Korea, just taking a look at their manufacturing sentiment numbers at the beginning of this month have been quite strong. But if we do continue to see a slowdown in Western countries as a result of, let's say, an increased lockdown, for example, then there is going to be the issue that these manufacturing economies based out eastwards are going to start to slow as well. So something to bear in mind there. It's not just about where things are made. Obviously, it's more about the demand side of things. Given this is a demand-led recession that we are seeing, this is not a supply chain recession as it stands currently. So as far as COVID-19 goes, one thing we will always say as well is that this is probably the most individual recession that we've ever had. We have had balance sheet recessions like we saw with the global credit crunch back in 2008. We have seen recessions as a result of oil prices, for example, and we've seen recessions even simply as a result of the end of the business cycle and animal spirits starting to turn downward, high inflation, that kind of thing, bring the business cycle into a period of consolidation. But COVID-19 is really an individual circumstance. As you will have seen, I'm sure you will have seen over the course of the past 5 or 6 months or so, countless studies where international businesses, S&P 500, Fortune 500 businesses will have said that another banking crisis was a risk to their business. Terrorism was a risk to their business. A trade war was a risk to their business. No one had a pandemic as a risk to their business. So it really is an individual issue that we are seeing at the moment. As I've said there, it has become clear that construction and manufacturing will crank back into gear sooner. The wider services economy is taking a lot longer to get back to some semblance of normality. And the one thing that we as economists have to realize, and anyone who's obviously within the services sector and the wider economic community will have to realize, is that ability does not equal willingness. I have the ability now to travel internationally. I have the ability to go and sit in a restaurant every night of the week if I wanted to. I have the ability, if my boss wasn't here in the office, to spend the entire afternoon in the pub if I wanted to as well. But I'm not going to do that. A, because I probably lose my job, but also B, because of the risk of the transmission of COVID-19. So while we see consumers have the ability to go out and spend money, to go and try and live as normal a life as they possibly can, whether they will exhibit the willingness to do that. And therefore, we think talk of a V-shaped recovery outside of certain very, very specific sectors are fantasy land, to be honest. We also don't know, as I've said on the right-hand side of this slide, we don't know what the outlook for the virus is moving forward. There's a lot of fears, certainly here in the UK, about the ability for the NHS here to be able to cope with both the spike in COVID-19, but also the typical seasonal flu elements that we have in the winter, and just a pickup in demand for the NHS that we typically see in the winter as well. And we expect similar health services to be affected a similar way as well. And therefore, whether instead of seeing regional lockdowns as we are at the moment, places, cities, for example, like Leicester here in the UK, or Manchester, which have had certain communities locked down for a state of 2 weeks, for example, whether we actually go back to a more national level lockdown, and obviously a similar hit to GDP, a similar hit to business preparedness. Now, businesses have had some time to prepare, but there's still a non-negligible level of business anxiety as well, which means that businesses are not investing as much as they used to, because they have to keep cash on hand to be able to weather another potential lockdown, and that may also lead into further unemployment moving forward. Unemployment is probably the most important thing that we could be talking about at the moment. People's jobs. We are expecting a huge increase in joblessness in the UK. The unemployment rate as it currently is about 4%, which is great, but that doesn't account the 9 million people, doesn't account for the 9 million people who are having their wages paid by the job retention scheme, the furlough scheme, or having at least 80% of their wages paid by that as it currently stands. That will end in October. Therefore, we could see as many as we're forecasting, maybe 15 to 20% of those people who are currently on furlough to lose their jobs. And therefore, we could see 15 to 20% of that is of 9 million people. You're looking at nearly as many as 2 million people lose their jobs over the course of a month. And that's obviously going to be negative for growth. It's going to be negative for spending. It's going to be negative for the UK economy as a whole. This is obviously not a solely UK issue as well. We will see similar problems in other places which have furlough schemes. However, theirs last a lot longer than the UK's. The UK's is ending in October. Spain's, for example, is going to last a full year. Naturally, that's also when government support is going to run out, because government support will only last so long. As much as governments have maybe a pliable relationship with printing money at the moment and being able to spend that money as they see fit on their populace, as it stands, it will run out. It's just a case of how long it will last, and therefore how big the fall off is once we come to the end of it. Now, with my last slide, Brexit. I put my hands over my eyes because it's just a natural habit that I have when I talk about Brexit, given that I've been speaking about it for the best part of 4 years now. It's probably going to be written on my gravestone. Here lies Jeremy Thomson Cook, killed by Brexit. But we had hoped that the government would have used coronavirus as a reason to say, okay, let's halt Brexit for a little bit. Let's deal with coronavirus. Let's extend the transition period a little bit, and let's see where we are. And then we'll get back to it over the course of 2021. That's not going to happen. We will leave the EU by the end of the year. The only question is in what trading state. We're back to the politics with the game of chicken in politics here between the UK and the EU. Don't expect a deal. Don't expect anything politically from the UK or the EU until September or October. This is not a political deal that can be done at the last minute. This has to be done a couple of months beforehand, because every single European Parliament has to vote on it. And now this has caused issues before on trade. The EU-Canada trade deal was held up by Belgian cheese producers for 6 months. So we could easily see almost an accidental no-deal Brexit. And unfortunately for businesses here in the UK, they still have very, very little idea about what their new trading relationship is going to be with the European Union, our main customer, with less than 6 months to go. As I said, there's a lot of talks planned between September and October. Nothing happens in August, as any of you will know who's done any business with anyone in Europe in August. They're all at the beach at the moment. So we're going to be back to watching headlines, we think, on a kind of Friday basis, Friday and Monday. Friday because that's when the Brexit talks of the week tend to break up, and we get both negotiators saying we're far apart on fish, but we may be making some ground on financial services. And Monday, because that's when politicians talk to, the Sunday papers talk to politicians, and that's when they get their headlines. That's when they get their headlines out. For now, from an economics point of view, businesses are not thinking about Brexit. And that's the real risk, I think, is that CFOs and CEOs only have enough bandwidth at the moment for one risk. And at the moment, that's coronavirus. But were we to see a pickup in Brexit risks towards the end of the year, then your average small and medium-sized business, international business here in the UK, is going to be hit with a double whammy of, I've got to worry about furlough schemes, I've got to worry about maybe letting people go because we can't afford them anymore. We're having to shut down a part of our business because that's no longer viable. And also, I've got to deal with Brexit as well and the changes that are going to happen to our supply chains. With that, I'll look forward to your questions in the Q&A. I'll pass back to Doug and look forward to hearing from Ryan and from Caitlin.
Awesome, Jeremy. Really great information. Really appreciate it. You joined Equals fairly recently, and Equals, as many of you know, allows you to move and manage your money across borders. What was it about Equals that got you interested in what they're doing? You've been involved in the financial industry for quite a while. What was it about Equals that got you hooked?
So I've been working in currency since 2002. I may not look it, but I have been. And I left my previous job in the summer of 2019. Took a little bit of a break, but always, currency is always going to be the market which has the most interesting things going on. And especially talking to businesses who trade internationally, if you can help them with their currency, if you can help them settle payments quicker, faster, easier, cheaper, then you are a force multiplier for the business community. And I know from experience of coming up against Equals when I was working at a competitor, that they were a shop that was going places. So as soon as I started talking to someone here about a position, I knew I was in the right place.
Fantastic. Definitely going places. Thank you very much, Jeremy. I'll hold on, and for the questions, keep them coming in. And our next speaker is going to be Ryan Sachs. He's the business development leader at V. Alexander. He's based out of Nashville. Jeremy is based out of London, as you probably surmised. Ryan is a great member of Global Chamber from many standpoints. One is they do some really great work for our members. And Ryan also is involved in a lot of different programs that we have within Global Chamber, including Export League. So Ryan, really appreciate your knowledge and expertise, and looking forward to hearing your thoughts around what's happening with the supply chain there in across the region and possibly around the world as well.
Yeah, well, Doug, thanks so much for having me this morning. Jeremy, thank you for kind of painting the picture of what the economies around the world are looking like. So many of us are affected, whether it be because of layoffs, furloughs, the pandemic, and so it's not a great year. 2020 hasn't been fantastic, but I think we've learned a lot though from the supply chain and logistics side. COVID-19 has definitely exposed a lot of risks and how businesses manage their global supply chains, a lot of instability and just uncertainty. One of the big things that we've seen is when it comes to ocean shipping, that the volumes have dropped a lot. And that's because just there's no demand for a lot of the different goods that are moving around the world. And so as a result, carriers have cut supply chains, or cut the supplies of vessels by close to 50%. In the first 6 months of 2020, there were over 1,600 blank sailings by carriers. And so what a blank sailing is that's a vessel that's not in operation on that line. So it reduces the available space. And as a result, the price for shipping goes up. Last time we saw rates for ocean shipping as high as they are now was back in 2017 when Hanjin declared bankruptcy, and we had to pull all those vessels out from the fleet and eliminate that carrier as an option. There's different things that are happening, right? I mean, You look at the events this week that happened in Lebanon, right? There's a warehouse that's at a port, and a tragedy happens. Well, it's going to affect the supply chain, right? Vessels can't go in to those foreign countries now while they go through and are going through the damage and everything. You know, the hurricane on the East Coast that happened, there's flooding, there's things that happen there, right? We have to just be aware that it's not as easy as an easy button and then it moves. There's a lot of things that go in with the supply chain. You know, with airlines, 95% of passenger traffic went away. So what do airlines do? Well, they begin retrofitting their planes to be able to move personal protective equipment or PPE because the demand is so high. We look at air freight rates. In May of this year, they were so high. They were up 136% from May of last year from China to the US. And they were up over close to 70% from from China to Europe. And so, these increased costs, these things that are happening, how do we plan for them or what do we, what's our approach? I think, within the supply chain, there just has to be this change in mindset. And I see it happening with the clients that I work with on a daily basis. And it's, prior to pandemic, it was let's prepare for the best and let's expect the best. Like Jeremy had said, pandemic was never in a crisis management tool or, anything. It wasn't on anybody's, on their mind. So now I see it as to hope for the best, but prepare for the worst. There's a new balance between securing your supply chain, but also managing costs and efficiencies and doing it in the right way. Jeremy had kind of alluded to it. Around the world, many companies are hugely reliant on China, Southeast Asia, and other low jurisdictions. But companies can't just source from one region or one supplier. In order to limit the impact, companies have to think much larger scale and have contingency plans in place. Just a couple practical ways to kind of how to monitor your supply chain that can be done through technology. So working with suppliers and logistics companies to utilize technology and provide platforms to their customers. Analyzing your supply chain on the best way moving forward. And then, this could be costly depending on how large your supply chain is, but restructuring your supply chain based on facts. So not just pandemic related, but let's think about trade wars with, different countries, the US and China trade war. Think about free trade agreements. What about control and protection efforts that are going on? Like I had kind of said, there's so many things that are changing every day and impacts that can happen, on any given shipment or any given customer. So, just think about requesting your bookings and scheduling in advance. Think about how airlines and steamship lines, they work like hotels, right? So they're going to overbook their vessels, they're going to overbook their airplanes, knowing that some people might cancel, but they have to overbook in order to make sure that they move fully. And so just be prepared for different changes that could happen with that. Look at, be prepared for port delays or rail delays. Look at the West Coast right now. LA is having a lot of delays. You look at Montreal, they're having rail port strikes. So there's things that are going on that are outside of anybody's control. We just have to be aware and just kind of buffer in some extra time within your expectations. Just because it says, hey, it's going to take 20 days to get from China to the US West Coast, things can happen. It could take 25 days, it could take 30 days. But I really appreciate just the opportunity to kind of just share what's been going on during COVID and just some practical steps you guys can take just to make sure that you guys are securing your supply chains.
Plan for the best and prepare for the worst. We got it. Absolutely. Thank you, Ryan. Our next speaker is Caitlin Balderrama. She's the Air and Ocean Branch Manager at Mainfreight. And Caitlin herself has a very deep and wide experience in logistics, global logistics, and her company Mainfreight does as well. I know, Caitlin, you talked about getting some feedback from your Amsterdam office as well for for this conversation today. So thank you for sharing. We appreciate your membership, and let us know more about the situation from your perspective, please. Oh, are you on mute maybe? Yep.
I was on mute. That's the first fail that everybody does, right?
Classic, yes.
Thank you, Doug and Jeremy and Ryan for what you've already brought up before regarding COVID and Brexit. And Doug, that is correct that Mainfreight does have offices in Europe, and I spoke to our network, our transport network manager in the Netherlands regarding this call, and then also to my team in the UK. So Mainfreight has over 35 branches across Europe, stretching as far east as Poland, and then actually in St. Petersburg as well, so we're across Europe. We are the 7th largest trucking transport company in Europe as well, having acquired Wim Bosman years ago and then grown that network further. So that might be a familiar name to some people. And in the UK alone, we actually have a logistics facility in Manchester, an air and ocean office in Manchester, air and ocean office in London, and then also a transport team in the UK as well. So we have been watching Brexit very closely to see how that will impact us. And our network manager in Europe is doing monthly calls with the UK and with all of our European teams at the moment, looking into September, like you were saying, Jeremy, once everybody returns from their holidays and they realize, oh wow, this is happening very quickly on January 1st. We're expecting those calls to be either twice a month or even weekly or daily, depending on what the country is or what customer concerns are. So that's one way that we're preparing all of our teams. And what it is now is you have the UK, which is an island, so it has the natural barriers, but what they're going to have to deal with now is a brand new vocabulary and a brand new understanding, because previously they did have open borders and cargo was able to cross on the ferry or through the tunnel, airplanes very easily. And now all of a sudden you have customers in Europe who, if they want to import into the UK, they're going to have to learn a whole new vocabulary. They're going to have to learn what an HS code is. They're going to understand how they need to classify their goods. They're going to have to start having commercial invoices and proper pack lists that meet all the requirements that the UK will decide at some point what they want to have on the paperwork. And regarding trade deals, a big question that we have is, if there's no trade deal now, then the European Union might have to start to develop, there needs to be an agreement or an understanding of duties. And there are countries in Europe, for example, Switzerland and Norway, that might not be part of the European Union. And those countries are going to have to enact separate deals with the UK. And then we have a question regarding certificates of origin. What are these countries going to be able to do to protect and confirm this definitely is a product from Switzerland and should be duty-free versus a product from France, which might be very similar? And then where are those delineations of assembly versus the true country of origin? There's a lot of things that we're going to have to think about and see that's going to happen very quickly. Likely won't happen January 1st that everybody will have a clear understanding of what those requirements are, but it's a lot for people to think about. Another consideration is that you have the farther eastern countries in Europe, such as Poland and Ukraine, that produce a lot and they ship to Europe and they ship over to the UK as well. But if there's no trade deal between Poland and the European Union, between them and the UK, is the UK possibly going to look further east and maybe start having more trade deals with Indonesia, with Malaysia, with China and Vietnam, for example? And how will that impact the economies of the farther eastern countries who were previously relying on the demand that the UK had? So it's another consideration as well regarding the trucking and the transportation and just the demand that's going to be happening between the UK and Europe as a whole. Something else, let me see here, I just want to make sure. So Mainfreight as a company, we have 5 to 6 trailers a night that we send up to the UK, and then we have about 2 trailers, so over 300 shipments a day that we move in between the countries. So that's just one company. And when you think about all of the companies that are going to be moving between these countries, the question is regarding the documentation and who's going to be handling that now. So the UK is going to have to do a massive influx of customs brokers or people able to handle entries depending on what the UK decides is required for these entries. And that's another step where if those people don't know the rules or if they're not fully trained currently, how are you going to have them up and fully trained to process these clearances starting on January 1st? And that's an interesting problem. This is the only word I can think of. It's an interesting thought that the UK has to deal with as well to avoid all of those clearance issues and very long delays that could otherwise happen if cargo is stuck at the border on a truck and can't clear into the country. Regarding COVID, one thing I did want to mention that our team is seeing a lot in Europe is the fact that every country has a different approach to how they deal with COVID. Some might require masks at restaurants, some might not. Some might require different procedures in terms of deliveries and just different culture in terms of how each country is approaching COVID. And so that's another aspect of what drivers have to think about when they're delivering cross borders, you know, something from Belgium over to Germany. But on the whole, we are seeing that it's not business as usual, but we're seeing that there's definitely a demand, although the demand has changed. People still need to eat. They still have their habits on food. If they're not going on holidays as much and traveling, staying in hotels or whatnot, maybe they have a little bit more money to spend on more disposable items like maybe it's more bikes or maybe more recreational items. So those who were fortunate enough to not be negatively impacted and still have their jobs, they might still be spending money to a lesser extent, but they're spending on different things, obviously not in the service sector, but on other ways that make staying at home all day under lockdown more interesting. But certainly not on work clothes as much. And those are really the key points. One thing that we're doing to get our customers prepared really all over the world is if they have a VAT number and an EORI number in the UK, because they've only been dealing with their company entity in the UK that covered any of their other processes in Europe, we're making sure that they're set up in a European country as well now. So if they're importing directly into the Netherlands or importing into France, they have that VAT and EORI number to import to Europe because it won't be valid anymore when their UK import identification number won't work for importing into France, for example, once Brexit occurs. So they're going to need to set up with separate accounts and separate importer ID numbers as well. Just a few things that I wanted to mention regarding how we're helping our customers get prepared and how we as a team at Mainfreight are really watching the news and seeing what's occurring. Hasn't been much announced now, likely not a lot of change in August with the holidays, but once September hits, it probably will be go time more, and there will be more changes to be expected and more announcements as well.
Thank you very much, Caitlin. I wonder then what should a business do? You know, all three of you talked about lots of uncertainty, and especially with Brexit, kind of September, October is kind of when all this stuff is going to happen, or a lot of stuff is going to happen, and then there'll be the mad dash to January 1. So should a business just kind of hang tight, or are there some things that people should be doing at this point, either with your supply chain or with other aspects of the business? Any thoughts there?
I'll lead off. Yeah, certainly from, we've been advising businesses basically since the beginning of the Article 50 process, which was a 2-year time period within which the UK started to outline its withdrawal agreement, how it was going to leave the European Union. And that started on March 29th, 2017. Since then, basically saying, Brexit is coming, regardless of the political will in certain parts of the UK and in certain parts of the Parliament at the time, that we were going to leave the EU at some point, and this is going to have almost a philosophical change in the way that we deal with our largest customer in the European Union. So while the specifics are not particularly clear, and still aren't particularly clear at the moment, that you're going to have to get used to dealing in a certain, a likely more roundabout way, a roundabout fashion, to get the same amount of service you have from, from an import-export type of business. So hopefully any businesses that have dealt with or deal with the UK, or have an office here in the UK which deals with the EU on behalf of an American business, let's say, has had those 2 years to be able to prepare, to be able to make sure that suppliers or vendors of their goods within Europe, they have had conversations about the elongation of those supply chains, for example. I know Ryan was talking about timing. One study that we've been paying a lot of attention to is about how much additional processing time at the port of Dover will take for trucks leaving the UK into the EU. Given Brexit, an extra 40 seconds per truck doesn't really do too much. But if that's 70 seconds, if that increases to 70 seconds of just checking all the manifest, just checking everything, all the documentation is done appropriately. If that rises to 70 seconds, then the average tailback, the average traffic jam from the port of Dover would reach London. Now that's about 70 to 80 miles of traffic jams, and given the flow of trucks that we see through the port of Dover, which is 10,000 a day, it would take 6 days for that traffic jam to clear. So at the moment, the systems aren't in place. We don't think for those businesses to be able, those businesses, and therefore those trucks to be able to move through the port of Dover in a timely fashion. Now that's okay if you're exporting shoes or hats or bicycles, but if you're exporting foodstuffs, for example, or live animals, then you're phytosanitary stuff, then you're really in a difficult position. So businesses just need to be talking to their European customers, their European businesses, about how this needs to be amended moving forward. And as soon as they have a clearer idea from government, then it's going to be, as you said, Doug, it's going to be a mad rush.
Got it. Either Ryan or Caitlin, is there advice that you have for businesses given kind of the uncertainty? What are some of the things they need to be doing now?
Yeah, Jeremy kind of hit the nail on the head, per se, on that last comment, right? It's just effective communication, right? Talking with whether you're importing, into the UK or exporting out of the UK, just really understanding what are the government regulations, what are the import and export regulations that are now I need to be aware of. And so a lot of times it's the communication, right, that there's a lack of that. And so I think it's very important just to have clear communication with all parties involved in the supply chain. Obviously, each person has their own plan, and own thing they're trying to get out of the conversation. But if we can just talk to all parties involved across, the whole transaction, I think it'll be much easier to get to the end goal when it's all said and done.
Okay, very good. We're talking about Brexit and COVID, the coronavirus, but there's a third dynamic that's pretty important on global trade, and that's China. There's, the kind of the US China that's now reverberating into the UK and into Europe, the allies of the US, and the Huawei announcement today about, or the last bit where they're talking about removing US technology from all of their products. And so you've got a bit of a chill going on between China and the West more holistically. And so Jeremy, I wonder how that dials into the economics for the region as well. Is that a plus or a minus or a neutral?
It's definitely a minus at the moment. I mean, obviously Europe and China are closer than the US and China due to the Belt and Road Initiative by China to get, goods into the European Union via rail, obviously, as opposed to just hitting the west coast of the US. The other thing that you also haven't mentioned is there's a US election on November the 3rd. And we have a president currently who obviously is, who's very anti-China. But obviously we believe, and I'm happy to have a conversation about this, is that a Biden presidency can't simply just go back to how it used to be between the US and China, given some of the things that have happened between the US and China as a result of either coronavirus or trade policy, movements of the Chinese yuan, for example, implications over currency manipulation by the People's Bank of China. All of this comes together to sour a relationship between the two, the global superpowers that we currently have. So, as it stands, as soon as entering 2019, entering 2020, the biggest risk in economics globally was a US-China trade war. And that still hasn't gone away. It's just the fact that we don't literally have the front page space or the bandwidth to be able to talk about it. And markets are more concerned about whether we're going to get a vaccine for coronavirus, more than Peter Navarro's latest chatter about what trade policy between the US and China is likely to be. If Donald Trump is victorious in November, we do foresee that the European economy will likely outperform the US economy on trade as a result of a slightly closer relationship with China, as opposed to the US relationship with China, which we think will likely become a lot more torturous over the course of a second term, because we believe that will give Donald Trump the belief that everyone backs up what he's been doing previously.
Got it. Do you have an outlook on the more likely scenario of Biden winning?
Yeah, I mean, he's up in the polls at the moment. My head and my heart are kind of split on this at the moment. And obviously the fact is that I seem to remember that Hillary Clinton was about 9 points ahead in the polling with this far out. We're only, we're still around 100 days. I think it's 94 days until the election. So polling numbers don't really mean too much at the moment from looking at previous elections. And the key thing will be how the Trump campaign really gets out there and starts to hammer on its two main policy objectives, which are law and order and anti-China. And if the U.S. electorate buys into that, then we think Trump will be victorious. But if they don't, then we could see a fairly large landslide in favor of Joe Biden.
Okay. Yeah, I think we all have our opinions about where it's going to head. I wonder, Ryan and Caitlin, given the issues with China and even, I presume, the election as well, but especially with China, with shifting manufacturing, much of it out of China into Asia, or as was alluded to earlier, maybe shifting it into, Caitlin, you talked about the relationship with Poland and possibly shifting vendors and supply to different countries, maybe even further out into places like Indonesia. What are you seeing out there, and what should companies be thinking about relative to supply chains, especially if they're already somewhat connected to China?
Well, regarding the UK, a lot will hinge on what trade deal is announced. So if it's a very beneficial trade deal that encourages a lot of trade with, a particular Asian country or with China, then you could see a shift where UK manufacturers are wanting to do more trade with Asian countries. If the trade deal is beneficial to those countries in Eastern Europe or just Europe as a whole, and it's more of a free trade agreement, then obviously the convenience and the continued purchasing of maybe the exact same supplier who a UK company was already using would not change. And they would continue to use that European supplier, even though Brexit is officially out of the European Union. And it does really hinge on the trade deals that are announced in these coming months. Trade deals, historically, like Jeremy mentioned, they can take quite a lot of time to be ratified across all of the European countries, being that there isn't one yet to even be voted on. It'll be interesting. It'll be interesting to see if it gets done in time. So I'll leave it at that and see what can get done on the next few months, and it might take much longer to actually be reached. So what happens in the interim, we can't really predict that, what the agreement will be in the interim, if it's a deal or no deal Brexit on the 1st. What we are predicting, however, is potentially a good trade deal that works to the benefit of the UK with Asia. And if that does happen, then there will be increased traffic at the ports. And the question is whether these ports can actually handle the increased volume of ocean freight that is going to suddenly be coming in more into the ports of, Felixstowe, Liverpool, or Southampton. And if that happens, will there be increased dwell times? Will there be extra charges? How quickly will these new containers actually be cleared if the regulations for customs isn't yet understood for clearing into the UK? So we are predicting that there could be increased delays, but additional volume based on the outcomes of the trade deals that the UK announces.
So replacing some truck traffic with ships, ocean carrying. Okay, interesting.
So, Doug, back in 2018, the U.S.-China tariff trade war kind of started, right? It started with in June with the Section 232 steel and aluminum tariffs against a lot of different countries, not only China. Followed by in September the Section 301 tariffs against the majority of products that are manufactured in China. Guys, it's August 2020, and we're still in this same trade war, and same things are happening. To Jeremy's kind of comment earlier, a lot of this stuff is on the front page of the news. It's around COVID, but a lot of these exemptions and things that were applied for through U.S. Customs and the government gave leniency on some of these different products, those are all set to expire in September. Those are actually starting to expire this Friday, August 7th. And so, this trade war, the tensions, it's not over. It will continue on. And so I think to Jeremy's point on if it's a Biden or if it's a Trump presidency, what does it look like? I do agree with Jeremy in that whoever does take office in November, we can't just expect that things will go back to the way it was, because there's been some damage in relationships and things that have happened in the last 4 years that would have to be fixed, but also done in a politically correct way going forward, and kind of gaining trust with some of these countries and bridging some of the gaps between the different countries and things that we're doing here in the U.S.
Yeah, the election is November 3rd, and the new president will take over on January 20th, if God willing. So one question for all three panelists. It's related to the concept of deglobalization, or that we've kind of heard as kind of bantered around. How realistic do you see that trend becoming in light of increasing costs and complexity involved? The world is already well connected. It seems like it's more and more connected to each other. Is deglobalization really a factor? And maybe it's called something else, but what is that next thing that's coming, if it is? Do you have a sense of that? Maybe Jeremy, you should start that one.
I think that one thing we're going to see as a result of the fact that we've seen, certainly here in the UK, two substantive issues around trade, in the course of the past couple of years. Brexit, which is more kind of longer form, changes the whole relationship of the UK with its largest customer, but coronavirus, the complete shuttering of ports, factories, all supply chains, because everything's simply locked up. So it's caused a lot of people to question their reliability on such long chains with multiple inputs to make a very specialized manufacturing product, let's say. One thing I do think we will see is a lot more local manufacturing being used for, how can I put this, low value inputs. I think that businesses for longer term are going to be, if they're getting pretty easy parts, non-specialized parts, let's say, from around the world, when they could be getting them locally, and if their entire supply chain is falling over as a result of these fairly easy to find parts having to be shipped in from abroad, then management are going to sit there and say, why are we buying these from Singapore, for example? Why are we buying these from Vietnam when we can get them made for 4% more, let's say, down the road, and they can just put it on a low loader and send it up the road if things get hairy once again. So I think we'll see low value stuff trying to be a little bit more internalized by a lot of businesses. What that also means from an economics point of view is inflation. We're going to see producer prices, PPI, start to pick up, we think, as a result of this over the course of the next couple of years. The reason why it hasn't already is because of you have to have demand to have inflation, and demand is still very, very low. You know, to Ryan's earlier point about shipping demand is low, and we will see shipping demand pick up. And while logistics may become cheaper, because obviously you've got economies of scale within some of these ships that are being put together, for the average customer, for the average business, input prices will start to rise, we think. And so that's something certainly to bear in mind, that while deglobalization may be talked about as a way of protecting businesses, unfortunately for the end consumer, it may mean a hit in the pocket as well.
Okay, so it may be a re-globalization or a reconfigured. I'm wondering, kind of building on what you mentioned, Jeremy, climate change and reducing the transportation costs and impact on the environment, I presume goes along with that somewhat localization or hyper-localization that you talked about as well.
Yeah, you'd have to say so. It's one thing that a lot of people are talking about now is, why do I need to travel to buy these goods that I previously used to travel 30 miles for, and now I can, I was locked down and I did perfectly okay. And we will leave we'll leave the wider logistics to the companies that can bring stuff to our doors. So I think that what we'll actually see is what we call a barbell. So we'll have weight at either side, and that's hyper local for certain goods, but then hugely global for others. So for example, Amazon isn't really going to be affected by this because its net is already quite so wide. But on the hyper-local places, if you want to walk down to your local high street, your local shopping area and buy something, that's going to be fine as well. It's the middle sector that's going to have the issue. Where does it fall? Does it fall hyper-local, or does it try and push into the global atmosphere even more? And that's where those costs, that's where that globalization and environmental impact is going to have more weight, we would have to say.
Got it. Caitlin and Ryan, are you starting to see those kinds of impacts with the supply chains that you're involved with, or is that something that's down the road?
So in 2008, 2018, when kind of the tariff war started, everybody's first instinct was, oh, I have to get out of China. And so they go to these other Southeast Asia countries and try and establish a program, and they realize, wow, like maybe my quality isn't as good, or maybe the cost is too expensive to do the full move. And so they, will just continue to buy from China or keep the supply chain as is and not disrupt it. I think now going through the pandemic, we're in that same kind of mindset, like, oh, wow, I need to do something. I need to restructure all my supply chain. I don't think it's a necessarily a move of deglobalization, rather than just looking at your whole supply chain from a holistic point of view and being agile as a company to say, okay, here's a disruption, here's where I need to fix it. And if I am able to source it locally or closer to home, then maybe that's the best fit. But I don't think it's necessarily a strategy of let's bring everything back and only source, within our given country. I think it's just, like I said, being agile and just knowing, okay, here's a disruption and here's what I will do to kind of mitigate that risk.
Got it. That makes sense.
So I feel like reshoring has been a constant conversation. Really, as long as globalization occurs, there's always going to be a reshoring conversation as well, and more protectionist conversations. And I do feel like a country's policy sets the tone a lot. So if you have a particular country who wants to be more protectionist and wants to encourage more of their own economic growth within their borders, then they set the tone through policy, and businesses can either follow that policy or they can decide to still continue to look overseas. So that's one thing that will be interesting to see how Brexit's tone. Obviously, they set a bit of a protectionist tone already by leaving the European Union. But one thing to think about also is that Brexit occurred not just because of economics. It also occurred because of culture. And a lot of people voted for Brexit for cultural reasons and not just because of protecting manufacturing sectors or protecting jobs. So that's just one thing that I wanted to mention regarding that perspective of Brexit and deglobalization in particular. Regarding the perspective of of different countries specializing. You know, that's been the conversation since Adam Smith, is really when you go back to looking at different countries and they're going to be specializing in something that they're very good at, but then they're going to trade with other countries who are specialists at other things. China is quite good at what they've done to develop a high-tech sector that can't be replicated easily in Malaysia or Indonesia overnight, or Vietnam. Each country has its own specialty of maybe textiles versus that high-tech sector that China's really pushed forward. And that's something that is very difficult to find and replace quickly for other countries to get very strong at in terms of building that international trade. So deglobalization can occur to a bit, like Jeremy said, the middle sector, they might start to ask, why are they buying a widget in Singapore when they could produce it for a little bit more? And that question could also be pushed further depending on how the UK approaches duties and approaches encouraging domestic production further. And same with any country really around the world.
Good play, quoting Adam Smith to an economist. Very, very nicely done. Jeremy, while we have you, considering a lot of your expertise is in the currency area, there's a lot of things going on right now. What tips do you have at this point around the currency side, given all of the uncertainty and the dynamics that you're seeing out there?
I mean, I'm the only non-American on the call, and you guys will have known, obviously, probably will have seen the fall off in the US dollar that we saw in the month of July. It was the worst month for the dollar for the past decade. Dollar tends to have a good August, but we're starting to have a conversation about the role of the US dollar. Some people are saying that the day of the US dollar being the global currency of trade is over. I think that's a little bit hysterical for me. But one thing I will say is that we can foresee further US dollar weakness moving through the end of the year. There's a lot of factors out there that are weighing on the dollar. Obviously COVID-19, the fact that the US and US citizens have been the hardest hit by COVID-19 as far as deaths and cases. It's the hardest hit country. The response of the US Congress and the kind of the dilly-dallying around additional support for those who've lost their jobs in the form of $600 a week checks. That's not helping. The Federal Reserve's printing of money is also weakening the US dollar, and the fact that this goes, currency is a game of relativity. What's going well here, what's going badly here. And while things are going badly in the US, they're also going quite well elsewhere. We're seeing growth in Europe. We're seeing stimulus packages being put together. We're seeing politicians working with each other. So a lot of people are talking about the US dollar versus the euro being a lot more positive for the euro than the USD moving forward. So it's currently around 118, 119, moving above the 120 level over the course of the next 6 months. And the pound, my speciality, depends on Brexit. It could be 5% higher if we get a trade deal. It could be 10% lower if we don't. So for any businesses who deal with the pound, we can have a conversation about how you protect the value of your investments, how the value of your transfers and payments, because the one thing we can guarantee is that the end of 2020 is going to be very, very volatile.
Got it. And with the election, with Biden probably winning on November 3rd, what happens to the markets at that point? Can you take your crystal ball out, and does the dollar start to strengthen at that point?
Wall Street has to make its mind up whether it's positive to have Joe Biden or whether it's negative to have Joe Biden. For the dollar, we don't foresee it having too much of an impact, given the fact that the main architect of the weakness at the moment is the Federal Reserve, and that's not going to change as a result of Joe Biden being made the president on January the 20th. What it may do, if it does take some of the pressure off China, the US-China relationship moving forward, we do see further investment spending by, obviously it depends on the president, but it also depends on how the House and Senate races also go. But if we do see a more Democrat-leaning Congress with a Democratic president in the White House, then we would likely see the dollar strengthen on the back of that, on the basis of more fiscal spending.
Got it. Great. Well, we've actually come right to the hour, at the end of the hour. So we've gone from Brexit and the coronavirus to the election and every place in between, including China and climate change and a lot of different factors, a lot of things going on in the world right now. I presume, Jeremy, that makes it, does it make it fun that there's so many factors going on, or are you just, do you spend sleepless nights wondering how to get through all of this?
Well, I didn't have a beard before lockdown, let's put it that way. No, I'm joking, but it does make me, the boring markets are boring. It's interesting to have things going on. It's obviously a very, very difficult time. I just talk about these things. It's businesses who are actually having to work out how their business survives, how it moves forward, how it grows in these kind of environment. So if there's anything that we can do to help, and I'm sure not speaking for Ryan or Caitlin, but I'm sure our businesses, if there's anything we can do for businesses who trade internationally who just need more assistance about how to do it, then that's what we're here for.
Got it. For each of you, just 30 seconds to wrap up. Caitlin, anything you want to say maybe that hasn't been said or emphasized perhaps?
No, well, I mean, there's been so much that we've covered. Of course, I just want to mention that, if any company is curious about setting up their EORI number, EORI is how it's written, to learn how to import and really hedge their risks regarding Europe and shipping to the UK directly. We have teams across Europe, across the UK. We have over 2,500 team members who are in Europe with Mainfreight, and they're happy to meet with you locally and have a conversation regarding that. And really, it's going to be watching the news. We're all going to be on the same page. Nobody has that crystal ball to predict exactly what politicians are thinking on voting those trade plans. So January 1st will be an exciting morning.
2021 is going to be a better year, right, Ryan?
Let's hope for it. I love what I do every single day because it's ever changing, right? It's from talking about how to export food stuff to how to import steel and metal to how, to what does this tariff mean? And, I love my job because I get to work with just so many companies doing so many fascinating things. And really my goal and my job is to help you grow and help your business just be successful globally. So I'm happy to connect and, discuss and hear more about what you guys might be doing as a company and how, B. Alexander can support you guys in that goal.
Yeah, and any of the speakers, if you can't find them in the directory, send an email to info@globalchamber.org and we're happy to connect you. Jeremy, last word, any final thoughts?
All I would say is that, one thing that we've all spoken about is communication is key. No business is an island. If you're going through an issue, be it on trade, be it on finance, be it on currency or marketing or whatever it is, even if you're moving into a new area, a new business, a new country, there's probably someone who's done that before and probably someone who's had that kind of issue before. So reach out and ask for help. I can help from a currency point of view and international payment side of things. As I said, I've been doing it since 2002, through the financial crisis, through Brexit, and now through this. There's not many things I haven't seen. And I'm sure Ryan and Caitlin in their respective specialities as well. So if you have an issue, ask for help. I'm sure you'll be able to get through it. And I look forward to speaking to some of you soon.
Thank you, Jeremy. Thank you, Caitlin. Thank you, Ryan. Reach out to the Global Tribe. Good advice, Jeremy. And as far as kind of our next steps, we do 5 to 10 events a week. And we also make sure that our members are aware of events that are particularly interesting for people who are doing global business on our calendar. So if you're not involved with the newsletter yet, let us know and we'd love to get that to you. Next week, we have a couple more programs, one on men and women in global leadership and another one on financing your exporting business. And so those are the types of things that we do on an almost daily basis and connect people to the people they need to know to be prepared, to make the changes you need in your business and to be more successful going forward. And great examples today with Jeremy, Caitlin, and Ryan in terms of very capable professionals within the Global Tribe that can help you grow. Thanks, everybody. Have a great rest of your day.
Thanks, everyone.
Have a good one.
Take care.
Good night, Jeremy, almost.